we're going to be discussing the VWAP squeeze. So the VWAP squeeze, first and foremost, is a term that I've coined, and you might hear the term VWAP squeeze from other traders, and you'll see that what they're talking about is a little bit different than what I'm talking about. A VWAP squeeze, to me, is defined by a bottoms-up move where price action takes the VWAP out, bottoms up, right through there. And a negative VWAP squeeze would be the other reverse trade just to the short side, where price action moves to the downside, rallies into the VWAP or above the VWAP, and then takes the VWAP out to the downside, being a negative squeeze. So in the J. Lewis trading universe, we refer to a VWAP squeeze as this right through here, price action breaking bottoms up. Now, there are a couple things that you're going to want to pay attention to when you're VWAP squeeze trading. This is arguably my favorite way to get in. It's a high probability situation where if you can get a proper VWAP squeeze, the first target and level that shows any sign of weakness is going to be the high of day. When that high of day breaks, you would then overlay that high of day with the Fibonacci projection tool, and then you would manage and monitor your profit target taking levels to the upside. So in this video, again, we're going to talk about a VWAP squeeze and what to look for. And you can see that there is our bullish rally. Price action right through here drops. It comes up over the VWAP and then drops below the VWAP, and then right through here you can see that we get some VWAP resistance, and then price action starts to make its way to the downside. If you are looking at a stock that's not shortable, or if there is a ton of bullish news that suggests that a stock could move higher, I would not suggest counter trend trading that to the short side. The highest probability trade is going to be towards the upside. So what I will simply do, and again, I correlate my charts 2 and 5, so we can go either way here, but what I'm going to do is I'm going to look at these levels right through here that were above VWAP, and I'm going to mark those off. So there's the VWAP. I know you know what it is. It's the volume weighted average price. It's the measurement of both volume and price action at a specific point. The VWAP is exceptionally important to day traders, and it's an area where a lot of institutional traders, quote unquote, that don't necessarily understand technical analysis will simply say buy me in or sell me out at VWAP. So the VWAP is a very, very important holistic level for all different types of traders. And you will notice that when VWAP is taken out to the downside, if price action doesn't just immediately sell off and take out prior lows, then there is a lot of value in monitoring a potential squeeze, because price action could very well make its way back up to that level, as you can see right through here. So what's going on in this particular situation is you can actually see that there's my VWAP squeeze point, and I just bring it across with a vertical line at 488. You can see right through here that we get some consolidation, we're stepping off lows, and then price action flags, tests VWAP, tests that VWAP squeeze, then comes back in the range. What you want to really pay attention to here is where's the prior floor. Okay, so when it's testing and it comes back in the range, you might have gotten long here, you might have gotten long here, but you want to look at where the last floor is. And in this case, the last short-term technical floor is going to be 473. Why? Because you've got some support right through here, you've got prior resistance here, and prior support right through here. So this is a relatively decent area of structure. In this situation, you've got about 15 cents of risk. And based on that VWAP squeeze breaking, like it does here, you can see that the volume starts to step up, and there's now an increase of volume. And that's very, very bullish for a VWAP squeeze. Once you're long the VWAP squeeze, you're going to want to go up to the real body, and you're going to want to come across like so, and then you're going to want to make a note of the high of day, and then from there the 382, and then from there you're going to want to make a note of the 618. Now you'll notice here that your risk is the 15 cents. Your upside is 550, let's call it, over 488. So I mean, rough math, 12 cents to $5. So you're looking at about 66 cents of upside, roughly, if my math is right there. 66 cents of upside to 13 cents of downside. So you're looking at roughly about a 4.5 to 5 times the upside versus downside, which is going to give you a higher potential profit versus taking a flat top breakout, which we just talked about. Also, the failure rate on a VWAP squeeze, especially on a stock that's moving, a lot of people, a lot of traders would not necessarily prefer to get long VWAP as much as they would a flat top breakout. So there is some room, if this is wrong, to bail on the trade at 505, still netting a bit of a profit. Core principles on a VWAP squeeze is when VWAP is squeezing, you want to make sure that on the breakout of that VWAP squeeze, price action is above that 9-day exponential moving average and clearly above VWAP. You also want to make sure that you're taking note of this right through here, and this is a golden cross. That is where that 9-day exponential moving average crosses the VWAP. Is this a signal? I would not necessarily call it a signal to trade off of, because these do fail too, but I would say that this is a relatively good indicator. The golden cross here, 9 over VWAP, it's a pretty good indication that price action could potentially run. And in this case, you can see that price action did just that. So if we were to measure very, very simply where our risk to reward is, you can actually see right through here that our risk is going to be, there's our entry, there's going to be our rough risk there, okay? And you'll see that roughly we've got about 3% downside, and using our Fib Pros, it would come across like so. Assuming that we get up to that 618 where there's a ton of volume, we can measure all the way up, and you can see that there's about 14% upside. So that's roughly 5x. Okay, and so that's going to give you a higher probability. It's a higher probability trade with less fake outs. It's also going to give you higher profit target taking levels and potential profit period because you are buying below high of day. There is a failure rate that exists at high of day. So the big thing here is that if you're trading a VWAP squeeze with that golden cross, and the rules being price action is over the 9 over the VWAP, and it's squeezing that prior VWAP high, the first thing you want to do is you want to make sure that you are completely on track with being okay taking price action at high a day if price action shows weakness. But if price action shows a lot of strength like it does through here, you can see there's a lot of volume that comes through and it pushes, then you start to look at those higher Fibonacci projection levels. Hope that helps. And again, everything you're doing with the VWAP squeeze is going to be based around a defined asset allocation model with risk, potential profit targets, and again, we want catalysts, and this would be a technical catalyst. VWAP squeeze, golden cross, 618 targets, and no fear of taking price action off at high a day if it fails.